Hi students, 12th Standard Accountancy, Chapter 3, Illustration-4. From the following information, prepare capital accounts of partners Mannan and Sevagan when their capitals are fluctuating. So, listen here carefully. Mannan and Sevagan's details are given below. From these details, we are going to prepare fluctuating capital method. Here before illustration 1, 2, 3 we prepared under fixed capital method. That means two accounts are maintained for each partners, namely capital account and current account. Okay. Now illustration 4 we are going to prepare the fluctuating capital method for Mannan and Sevagan. What is meant by fluctuating capital method? What is the format we have to follow the fluctuating capital method? Let's know. So this is the format for the fluctuating capital method. Okay, under fluctuating capital method, including capital with all other transactions between partners and the firms are recorded in the capital account, partners capital account. Okay, let's know the format of the fluctuating capital account. Okay, it is the format of the fluctuating capital is very simple, like ledger account. First we have to write the heading, that is partners capital account. On left hand side date particulars and the name of the partners respectively we have to enter here. On right hand side creditor, date particulars and respective partners name we have to enter here. Okay, so this is the simple format for the partners capital account, which means fluctuating capital method. Okay, let's go for credit side. On credit side, items are initial capital. First and foremost transaction we have to enter on credit side is buy balance drawdown. What is meant by buy balance drawdown? Opening balance of the capital account. Okay, which means the initial amount of the capital introduced by the partners of the business. When they started business, they introduced capital, right? That capital we called it as opening capital. That opening capital we have to write by balance drawdown. Okay, and their amount we have to enter respectively. Okay, then after opening balance we have to enter the additional capital introduced during the year by the partners. We have to write for additional capital by cash account or by bank account, and all other transactions we know very well. Interest on capital will be appears on credit side, on partners salary account, partners commission account, and if the partners get profit, it is to be entered on credit side, partners profit account. Okay, so these are the transaction is to be entered on credit side. And let's go to debit side. The debit side items are transactions are capital withdrawn. Listen, withdraw cash, you know very well, withdraw cash for personal use, that is called drawing. So drawing is different from the capital. This is called withdrawn capital, not cash. Withdrawn, not withdrawn cash, withdrawn capital. Okay, so if the partners withdrawn cash, you have to write drawing. Withdrawn cash for his personal use, the term you used is called drawings. But here, if the partners withdrawn capital, you have to write to cash account or to bank account on debit side. Are you clear? What is the difference between withdrawn capital and withdrawn cash by the partners? Okay, so then to drawings account, which means cash taken from the business for partners personal use. Okay, we use the term drawings. Okay, then drawings account, interest on drawings account. So drawings account, withdrawn capital, withdrawn cash, and interest on drawings. Okay, so all the drawings we have to enter it on debit side of the fluctuating capital. Okay, and current account too. Okay, so listen, so to cash account or to bank account for capital withdrawn, and if the partners taken cash from business for their personal use, you have to use the term drawings account will be appear on debit side, and interest on drawing is to be recorded on debit side, and if the partners get loss, it is to be entered or recorded on debit side. Okay, so these 4 transaction is to be recorded on debit side, and opening balance, additional capital, interest on capital, these and all are capital items. These and all are drawing item. So opening capital, additional capital introduced during the year, interest on capital, partner's salary, commission, profit. These and all transaction is to be recorded on credit side. You know the difference between capital and drawings. Okay, so this is the simple format we are going to prepare for the fluctuating capital method. So as per the fluctuating capital method, first we have to identify and mark the given information. Capital on 1st January 2018 credit balance, they have given here clue. So if they given, so 1st January means what? Opening balance. Okay, so initial capital introduced by the partners of the business. This is the opening balance. Where it is to be recorded? It is to be recorded on credit side. By balance brought down, Mannan 2 lakhs and Sevagan 1,75,000. And drawings during the year, it will be appears on credit side, debit side, drawings. And interest on drawing also debtor side. Share of profit goes to credit side. Interest on capital goes to credit side, and salary credit side, and commission credit side. So we marked what are the items will be appears on, whether it is debit or credit on fluctuating capital account. Now we are going to prepare the fluctuating capital method, which means partners capital. Commonly we called as what? Partners capital. First we have to write the heading, that is partners capital account. The format you know very well. Left hand side debtor, particulars, Mannan and Sevagan, respective partners name enter here. On right hand side creditor, particulars, Mannan and Sevagan. If they given the date, you have created the date column on debit and credit both the sides. Okay, so listen, capital on 1st January 2018, this is the opening balance. So where it is to be recorded? It is to be recorded on credit side. So you go to credit side. Listen here carefully. On fixed capital method, the partners capital account, the capital transaction always recorded on credit side. Whether it is initial capital or additional capital, it is to be recorded on credit side of the partners capital account under the fixed capital method. But according to the fluctuating capital method, the capital balance will be either debit side or credit side. Listen, they have given here partners capital accounts may show either credit balance or debit balance. It is fluctuating periodically. Okay, so it's not constant. If they given credit side, you have to enter the partners capital account on credit side. If they have given the question debtor for opening balance of the capital, then you have to go to debtor side. You have to write to balance brought down. Okay, so the capital account, there is a difference between fluctuating capital and fixed capital account. Under fixed capital method, the capital account will always to be recorded on credit side, additional capital and opening capital. But on fluctuating capital accounts, it maybe shows either credit balance or debit balance according to the capital. Okay, so as for the format, capital on 1st January 2018, they have given here credit balance. So you go to credit side, you have to write by balance brought down. By balance brought down means initial capital introduced when they started business. Okay, so by balance brought down, Mannan 2 lakhs, Sevagan 1,75,000 respectively. And we already marked what are the items will be appear on debit and credit side. Okay, according to the format, we have to enter here. And by profit and loss appropriation, which means profit, share of profit, Mannan 21,000, Sevagan 16,500. Interest on capital, partners salary, partners commissions we entered. Okay, then they have given here nil balance. Let's take salary, partners salary. Mannan salary is 18,000, but Sevagan is nil balance on salary. So you go to Sevagan for salary by salary account, Mannan 18,000, Sevagan nil balance. Okay, then You go to credit debit side, to drawings account, to interest on drawings account entered. Okay, so we have the higher value on credit side. Okay, if you get the higher value on credit side, you have to total it on credit side. The total amount of the Mannan is 2,51,000. The Sevagans total is 2,04,500 rupees. If you get the total on credit side, the difference will be goes to debit side. So for that you have to add 10 for Mannan side. Mannan column 40,000 plus 1,000, 41,000, then 41,000. You have to subtract it from 2,51,000. You will get 2,10,000 for Mannan's difference value balancing figure, and Sevagan is 35,000 plus 500, 35,500. We have to subtract it. We are going to find out the difference between them. So you have to subtract 2,04,500 from 35,500. You will get 1,69,000 rupees. This is the balancing figure for Mannan and Sevagan. Against this you have to write to balance carried on. This carried on means closing balance. Like ledger account, if you get the total on debit credit side, the balancing will be closing balance. You get closing balance on debit side. Okay, then you have to brought it down to the opposite side. Below the total you have to enter the same amount, 2,10,000 and 1,69,000 respectively. Against this you have to write by balance brought down, which means opening balance of the next accounting period. Mannan's opening balance is 2,10,000. Sevagan opening balance is 1,69,000 rupees. Do you have any doubt? Please comment it on the comment box. Thank you. Take care. Please subscribe my channel.